To me, it's something that every investor who's looking aggressively to grow their wealth should have. By the way, in my most recent quarterly report, I talked about the fact that I want people ask me, why are gold stocks performing so poorly, junior gold stocks, and I said, one of the possible theories for that is that in the past, if you wanted to have alpha on top of gold, you bought gold stocks because they outperformed gold. But 20 and 30-year-olds aren't buying gold stocks anymore. If they want alpha, if they want monetary debasement alpha, they're buying Bitcoin.
Hey guys, welcome to Everyday Finance. In his analysis of the growing fragility of the American financial system, Lawrence Lepard focuses in particular on the declining value of the US dollar, banking industry instability, and the ongoing increase in inflation. These problems reflect underlying fissures in the framework of global financial stability, rather than being discrete economic indicators. Lawrence highlights that overprinting, skyrocketing debt, and waning confidence from foreign investors are all contributing to the US dollar's decline as a stable reserve currency. The dollar was once thought to be the cornerstone of global trade and trust. The banking industry is currently dealing with structural vulnerabilities as some institutions continue to deal with the fallout from previous liquidity crises and dubious asset valuations. There is concern that small and mid-sized banks might be particularly vulnerable to systemic risks. Even though some official measures show a slowdown in inflation, real inflation is still high, which reduces purchasing power and disproportionately impacts middle and lower-income families. Lawrence connects these themes to illustrate how a storm might be approaching, one in which the average person is caught in the crossfire. Capital escapes to alternative stores of value like Bitcoin, and economic inequality increases. The lesson learned: this is a problem that affects everyone, not just Wall Street, and it has the potential to influence our economy for many years to come.
And you and I and all the gold people, we've known for a long, long time these pressures have been building. I kind of compare it to like an avalanche. I mean, the snow just keeps on falling and the thing looks stable, right? That's how the economy looked, that's how the markets look. But, snow keeps falling and the cornice gets bigger and bigger. And then eventually, you get enough, another flake falls and that's it. And it triggers it and boom, the whole thing resets. And that's kind of, it feels to me like that's kind of where we are.
What role does Bitcoin play for you in this equation?
Yeah, so as you guys all know, I'm a lover of Bitcoin as well as gold. I love them both. I hate it when people in both camps argue with each other because they're both right for different reasons. Gold is right because it's 5,000-year-old money. It's analog. It can't be debated, can't be debased other than just what comes out of the ground, etc. And so it's fantastic. And I own a lot of gold, and all my older clients own gold because it's less volatile and it's the thing that protects them. Bitcoin is a emerging form of sound money. It's an emerging monetary technology. They developed something called digital scarcity, which no one thought they could do. And I believe it's sound enough to eventually qualify as being a form of digital gold. And because it's being adopted, they both enjoy the fact that governments are printing money, and so therefore they're getting more valuable. In the case of Bitcoin, it also enjoys the fact that we live in a digital world, and adoption is growing. So right now, very few people own Bitcoin, but I think as time goes by, just as in the beginning, very few people use the internet, and then we all use the internet. And it's a very similar model in my view. And so I think more and more people are going to adopt Bitcoin because it's easy to move around, it's easy to store, it's easy to verify, etc. And so to me, it is emerging as a digital form of gold. And if you look at its performance over 16 years, it's really crushed gold, and I think it will continue to outperform gold. But the price you pay for that outperformance is extremely volatile, and people who go to buy it, have to be prepared to see it go down 50 or 60%, and it does that. It's done it repeatedly. So, I always recommend to my clients that you'd be nuts not to have some of it because it's got so much asymmetry and upside. But you buy the level, buy 5%, 10%, you pick your number, but buy the level which that if it goes down 50%, you're not going to freak out and sell it. You're just going to, in fact, you might buy some more, or you're going to wait 4 years because every 4 years it'll be at a new high. Historically, that's what's happened. So I think it's very important to understand that. But a lot of people, have closed their minds to it, and people I respect, people who are good economists like Peter Schiff, they just don't seem to get it. And I've tried multiple times to convince him and others of it, but Frank Juster, who I have a lot of respect for, and they're just not there yet. And I think, I would suggest to them read my book and understand the arguments behind it. I mean, to me, there is a risk. The biggest risk of Bitcoin is technology. And it's the reason why I was always skeptical of it. I thought this is a computer and computers blow up. And so, we all know computers are unstable to some degree. How can you have money based on computers? Well, as it turns out, because it's distributed, because there are a lot of nodes, a lot of miners, etc., I think they've solved that problem. And so I no longer worry about it technically blowing up. But that, if you want to complain against Bitcoin, you complain that the technology might blow up. I don't think it will. The other thing that could happen is if people lost interest in it. But there's no evidence of that happening. Every year, more and more people are buying it. So to me, it's something that every investor who's looking aggressively to grow their wealth should have. By the way, in my most recent quarterly report, I talked about the fact that people ask me, why are gold stocks performing so poorly, junior gold stocks, and I said, one of the possible theories for that is that in the past, if you wanted to have alpha on top of gold, you bought gold stocks because they outperformed gold. But 20 and 30-year-olds aren't buying gold stocks anymore. If they want alpha, if they want monetary debasement alpha, they're buying Bitcoin. I think gold stocks are still great. I own a ton of them. They're going to do really, really well. I'm just suggesting that some of the demand has gotten sucked away by Bitcoin.
Thanks to massive ETF inflows of over $3 billion, just last week, Bitcoin has roared back to life, with its price rising close to $95,000. According to analysts, this increase is driven by macroeconomic concerns like the declining value of the dollar and uncertain corporate earnings, as well as rising institutional demand, which makes Bitcoin a desirable hedge. Bitcoin is regaining important support areas, such as the 50-day and 200-day moving averages, according to technical indicators. But despite the bullish sentiment, there is a warning. Strong selling pressure near $97,000 to $100,000 indicates a technical and psychological resistance that may limit gains, at least temporarily. Massive inflows have historically preceded both tops and ongoing rallies, but historical trends are mixed. Bitcoin has previously surpassed $100,000 following comparable surges in inflows, indicating that it may break through that barrier once more. However, it is not always easy to keep it there. Although a break above $100,000 is feasible, analysts such as Alpha PC anticipate a significant correction as investors take profits and liquidity thins out. In essence, Bitcoin is at a turning point. Either it will overcome resistance and move into a new paradigm, or it will experience another healthy and potentially violent reverse.
Yeah, Danielle, it's the elephant in the room. It amazed me. We had a presidential election last year, never even got discussed. I mean, I don't think they're going to deal with it until a crisis occurs, and that crisis is likely to be a combination of very, very high inflation or collapsing, stock and bond markets. And, I'm not sure how that'll unfold, but, as I said to you before we started recording, I'm very glad I got the book out when I did because it feels like it's coming right now. I mean, things are really happening. These moves in gold and the bonds and stocks, these are not insignificant moves. It really does. And that's what needs to happen. And I think it probably will happen, but typically in the government, it's not, you have to have a real crisis before a reset happens. One positive thing, Secretary Bessent last summer gave a speech where he said he understood the problems with the world monetary system, and he felt like something akin to Bretton Woods, the last big monetary conference, was called for, and if it happened, he wanted to have a seat at the table. So I think he's very aware of the underlying issue, and I think he's prepared, and thinking about how to solve it. And there's some who would even argue that maybe they're thinking about a reset to gold. I thought it was interesting over the weekend that Trump tweeted that he who has the gold makes the rules. And then in turn, I've also noticed a lot of gold flowing from overseas back into the United States, which, one could argue maybe they're trying to refill Fort Knox. I'm of the opinion that Fort Knox was raided by Johnson to support the London gold pool in the 60s. There's gold in Fort Knox, don't get me wrong. I'm just not sure all of it's there. that I think it was rated at some point. So yeah, it's possible that Trump and Bessent are thinking gold reset, and frankly they should be. I mean, that, the solution to the problem, the book describes this. There's a chapter 22 is policy response, and talks about what we should do. I mean, there's a way out of this problem. Currency crises are not rare. They've happened all over the world for 100 years. And the positive thing, Danielle, is that when you solve them, things get better. Did a pod with a guy who grew up in Argentina in 1991. His parents were buying food every time they got paid as quickly as they could because prices were going up so fast. And of course, the currency failed and they reset to the dollar. He said a year later, Larry, everything was fine. So if we go back to sound money, and that's what the book talks about, we can repair this. This is not, if we don't get into a shooting war and we don't totally crater the economy, this is not doom and gloom. There's a solution here, but it's not, we're not going to solve it by printing more money. We've got to solve it. I mean, and by the way, going back to sound money, it'll be a one-time painful event for some. Well, yes, no, not in the short term. I mean, really, there's no, mathematically, there's no way to not have a serious inflation, which is why I think betting on, sound money assets right now is kind of a no-brainer bet. And that is, why is that true? It's true because there's just too much debt, and the debt needs to be devalued against the currency. The only way to devalue the debt against the currency is to write the currency up, which is effectively inflate it. So if we do this reset, we're going to have a very painful one-time high rate of inflation. Having said that, we would then, I think people would be able to tolerate it if they knew that on a go-forward basis after the reset, there would be zero inflation because we would be on a sound money standard. And so what I'm advocating for is a one-time reset as opposed to another 10 or 15 years of pain, where we just get inflated away 10%, 7%, 15%, whatever it is, right? And this reset would not be simple. I mean, it would be hard, but again, I think people can take pain if they feel like the future will be better. And a sound money future would clearly be better, in my opinion. Oh gosh, it takes them to much, much higher levels. I mean, there have been many gold standards run over the years, and some, you don't have to have 100% backing of the currency by gold, but typically you have to have at least 40% backing. And that would imply a gold price of kind of 15, 20, 25, $1,000 an ounce. I mean, numbers significantly higher than we are today. So, and it could go higher. There's, it depends. I mean, probably before we do the reset, there'll be some more money printing. So all that new money printed will only make that number a higher number. So my personal target for gold, Danielle, is I think we easily hit 5,000. Maybe, this year, but certainly in the next several years. And then after that, I think we hit, and then I think after that we hit 10. Beyond that, it gets very fuzzy. I mean, we really don't know what the policies they're going to pursue are. If we get a Stephanie Kelton as our Treasury Secretary, she's the MMT woman. Gold's going to infinity. Either by year end at this pace. I don't think we're going to get there this year, but none of us really know. And it's a very chaotic situation. And the problem most investors have is that they're looking at the last 40 years. And they didn't see any kind of chaos like this. I mean, everyone bought the dip in the stock market and everything was deflationary. And so I really don't know the answer to that. I don't know what the Supreme Court's going to say. They've asked for a ruling on it. My sense is Powell is a tough guy and he's going to stand tough and he's not going to cave into Trump. I actually think it's a little bit of a moot point because what I think is going on is Bessent is going to force Powell's hand. I mean, Powell, if the financial system gets unstable and starts to come unglued,
right,
Powell is going to say, forget the inflation mandate. I've got to keep the ATMs running. It's an emergency. I have to do it. So Powell really needs the political cover to do what we all needs to be done. And I think Bessent lit the fuse to create, the explosion that's going to have to cause Powell to do the big print. So that's kind of how I see it going down, and all the other stuff is just kind of political posturing back and forth. I don't think Powell's going to give in. I don't think Trump's going to give in. Oh, there's no doubt. I mean, look, when the long bond goes through 5% and the dollar, is falling into the 80s, the stock market is down 30 or 40%. I mean, in the COVID example, the stock market was down 32%. And Powell panicked and printed like crazy. Stock market right now is down round numbers, just around 20%. I mean, another 20% down with an economy falling apart, no shipments from China, unemployment rising, etc. Well, they're going to change their tune. The mandate is going to become we've got to support the economy, and we've got to worry about our unemployment mandate. And yes, there's an inflation risk, but we'll have to deal with that. I can hear him saying it. He'll pivot just like he did before.
Yep.
So that's coming, but it's going to take a little bit more pain. And Besant is out there making sure that we administer the pain.
With inflows of about $3.4 billion, cryptocurrency exchange-traded products, ETPs, had a historic week, falling just 13% short of their peak from December 2024. The activity was dominated by Bitcoin ETPs, which reversed previous monthly outflows and brought in about $3.18 billion. The total amount of Bitcoin ETP assets under management reached an astounding approximately $132 billion as a result of these inflows, while the market for crypto ETPs as a whole is currently valued at approximately $151.6 billion. With approximately $183 million in new inflows, Ethereum finally ended an 8-week losing streak. Other altcoins such as XRP and SUI also saw a resurgence in investor interest. Interestingly, despite the bullish environment, Solana was the exception, seeing outflows of about $5.7 million. Strong demand was seen by major players like BlackRock, Fidelity, and ARK Invest, with BlackRock leading the race for inflows. This suggests that mainstream finance is continuing to increase its exposure to cryptocurrency. Analysts are interpreting the spike in cryptocurrency investment as a direct reaction to macro uncertainties, such as the declining value of the dollar, waning bank confidence, and corporate earnings anxiety, which are pushing money into what many now refer to as digital gold. Crypto may be evolving from a speculative gamble to a long-term strategic asset class as a result of this wave of institutional adoption,